Hello and welcome to our channel. In this video, we'll be discussing how to invest in real estate, even if you don't have a lot of money to start with. Real estate investing can be a great way to build wealth, but it can seem overwhelming if you're not sure where to begin. That's why we put together this guide to help you navigate the world of real estate investing and find opportunities that fit your budget. Whether you're a first-time investor or a seasoned pro, we're confident you'll find some valuable insights in this video. So without further ado, let's dive in. Before we dive into the specifics of investing in real estate with little money, let's take a moment to understand the different ways you can invest in real estate. Generally speaking, there are several ways to invest in real estate, including rental properties, flipping, and REITs, real estate investment trusts. Rental properties involve purchasing a property with the intention of renting it out to tenants. The idea is that the rent you collect will eventually cover your mortgage payment and other expenses, while also generating a profit. Flipping involves buying a property, making renovations or improvements, and then selling it quickly for a profit. This can be a high-risk strategy, but it can also be very profitable if done correctly. REITs are another option for investing in real estate. These are companies that own and operate income, generating real estate properties, such as apartments, office buildings, and shopping centers. Investors can buy shares in the REIT, which entitles them to a portion of the income generated by the properties. Each of these strategies comes with its own benefits and risks, so it's important to do your research and understand which strategy is right for you. For example, rental properties can provide a steady stream of passive income, but they require ongoing maintenance and management. Flipping can be very profitable, but it's also a high-risk strategy that requires a lot of upfront capital. REITs offer the benefit of diversification, but they also come with fees and other expenses that can eat into your profit. Now that you have a basic understanding of the different ways to invest in real estate, let's discuss how to find affordable real estate investments that fit your budget. One strategy for finding affordable real estate investments is to look for properties that are being sold at foreclosure auctions. These properties are often sold for less than market value, but the process can be complicated and requires a lot of research. Another strategy is to look for off-market deals. These are properties that are not listed on the MLS, multiple listing service, and are therefore not easily found by the general public. You can find off-market deals by networking with other investors, reaching out to real estate agents who specialize in investment properties, or by searching for sale by owner properties online. Working with a real estate agent who specializes in investment properties can also be a great way to find affordable real estate investments. These agents have access to a wide range of properties and can help you find deals that fit your budget and investment goals. Another strategy for finding affordable real estate investments is to be creative and flexible. For example, you might consider investing in a property that needs some work, but has the potential to increase in value once it's been renovated. Or you might consider investing in a property that's located in an up-and-coming neighborhood that's likely to experience growth in the coming years. Regardless of the strategy you choose, it's important to do your research and understand the market before making any investment decisions. Look for properties that are priced below market value and have the potential to generate a good return on investment. Now that you've found an affordable real estate investment, the next step is to consider your financing options. There are several ways to finance a real estate investment, including traditional mortgages. This is the most common way to finance a real estate investment. You'll need to have good credit and a down payment of at least $20,000 to qualify for a mortgage. Keep in mind that traditional mortgages can be difficult to obtain if you're investing in a property that needs a lot of work. Hard money loans. Hard money loans are short-term, high-interest loans that are typically used to finance fix and flip projects. These loans are easier to obtain than traditional mortgages, but they come with higher interest rates and fees. Private money loans. Private money loans are similar to hard money loans, but they're provided by individuals or groups instead of institutions. These loans can be a good option if you have a good relationship with a private lender. Seller financing. In some cases, the seller of the property may be willing to finance the purchase themselves. This can be a good option if you have a good relationship with the seller and can negotiate favorable terms. Regardless of the financing option you choose, it's important to carefully consider the terms of the loan and how they will impact your investment. Make sure you understand the interest rate, fees, and repayment terms before signing on the dotted line. In addition to financing, it's also important to consider the ongoing costs associated with owning a rental property. such as property taxes, insurance, and maintenance. Make sure you have a plan in place for covering these costs and that you're prepared for unexpected expenses. Congratulations! You've successfully financed and purchased your first real estate investment property. Now comes the crucial part, managing the property to maximize your return. The first step in managing your real estate investment is to find good tenants. You can do this by advertising the property on rental listing websites, hosting open houses, and screening potential tenants carefully. Make sure to run background and credit checks and verify employment and rental history to ensure that your tenants are responsible and reliable. Once you have tenants in place, it's important to maintain the property and respond promptly to any maintenance requests or repair needs. This will help keep your tenants happy and reduce turnover, which can be costly in terms of lost rent and advertising expenses. In addition to maintaining the property, it's important to track your income and expenses carefully. Keep detailed records of all income and expenses related to the property, including rent, maintenance costs, and property taxes. This will help you accurately calculate your return on investment and make informed decisions about future investments. It's also a good idea to regularly review your rent rates and compare them to the local market. If your rent rates are below market value, you may be leaving money on the table. On the other hand, if your rent rates are too high, you may struggle to find and retain good tenants. Finally, it's important to keep an eye on the local real estate market and make adjustments to your investment strategy as needed. Real estate markets can be volatile, and it's important to be prepared to adapt to changing conditions. By following these tips and staying on top of your property management, you can maximize your returns and build a successful real estate investment portfolio. And that concludes our video on how to invest in real estate with little money. We hope you found this information helpful and informative. If you have any questions or comments, please leave them in the comments section below. And don't forget to like and subscribe for more videos like this one. Thanks for watching.